Doing well today. It is Wednesday, the 20th of October. Just going to run through the numbers really quickly. It's going to take less than 5 minutes, and we're going to get you out of here and on to watching the market, see what's happening. All right, so let's jump into it. Let's begin right here. What do we have for news today? Nothing really important coming up. No high impact news, no red reports that we need to worry about today. There is some budget information coming out, but none of this is really gonna, well, I can't ever speak in definitives like that because we don't really know, but none of this should have a major impact on the marketplace. So with that said, we're not gonna have to dive out of the market or stop anything that we're doing in order to account for any high impact announcements that are coming out midday. So with that said, we can just kind of start watching the regular trends and seeing what opportunities exist. On the ES or the S&P 500, what we're watching here is for long trading opportunities. So we're watching this to see, we've got a 4-hour bias that's long, 30-minute bias that's long. So obviously we're looking to see if we can find a long trading opportunity. What that will look like for us is a pullback. So we'd like to see, lower highs and lower lows pulling back. I see that come down, at least 4,500, maybe 4490 area, but a pullback, lower highs, lower lows, lower highs, lower lows, and then a break back in the direction of that market bias, something like we saw here with a break back up, or here a break down with a break back up. None of these were trades for us. As you can see, there's no green or red arrows on this indicating that we have a tradable opportunity. So, again, we're just simply waiting for that opportunity to come. If it does, that's when we take action. I can't reiterate this enough. In order to have a consistent outcome, you have to have a consistent process for looking at the market. If you're forcing trades, trying to create trades that don't meet your criteria fully, you're never going to be consistent because at that point you're trading with emotion. All right. Crude. So we're looking for long trades on the S&P. As far as breakouts, I don't have a breakout for you. We haven't sat down on a channel for quite a while. If you want to look at a breakout here, you could probably form a channel here, but that's not really a channel. We need a channel over multiple days where we kind of go flat before we can really look for breakouts. So even from a breakout perspective, nothing here. So just wait for it. Let the market do what it needs to do to set up. And if we get the opportunity, like we saw yesterday over here in crude, if we get the opportunity, then you can obviously take those trades. Crude is a mixed bias this morning. We have a 4-hour bias that's long, but the 30-minute bias has rolled over on us. So we have a mixed bias in crude. So we're going to put a big X here on crude for the day. Yesterday, we did have tradable opportunities. So we can see the market started pulling back. We had a long trading opportunity, right? It's long. 4-hour bias long, 30-minute bias long. So we're looking for long trades. Did exactly what we'd like to see. The market pulled back very smoothly. Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and then gave us that opportunity where, on this close of this bar, said, hey, check it out. We made lower highs, lower lows. Check it out. If it breaks back in the direction of its market bias, you've got an opportunity to trade, and we can see where that lined up to give us an opportunity to trade. Now, here is a caveat. I've said this before, I'll say it again. If you're trading regular, just one lot of crude, this would have been too much risk. You could have not have taken this trade. So you would have had two choices. A, don't trade it, or B, chunk down to a micro and then trade multiple micros. If you're trading multiple micros, then you had an opportunity to be in this. So you've got to manage your risk and you've got to manage your lot size. Part of managing risk is managing your lot size, and you've got determinations to make. So if you've got risk that's outside of your parameter, chunk down on the number of contracts that you're trading, it allows you to take a trade. This would not be counted in the model portfolio that I've been tracking over the course of this year because this did exceed the risk parameter for one standard lot of crude. However, like I said, if you're trading micros, this did give you the opportunity to participate because you could chunk down, trade multiple micros, and you would have been able to pull out a little better than one-to-one risk to reward here. All right, so not going to go too much into more detail on that. Gold, we have a kind of a well, it's not kind of. We have a long bias on gold. I don't know why I'm getting tongue-tied on that. Gold, 4 hours long, 30 minutes long. We're seeing a big push this morning. So in order to participate, we don't want to chase this. we'd like to see the market pull back a little bit, you know, making lower highs, lower lows, and then break back in the direction of that market bias in order to participate in gold. So that is it, guys. Right at 5 minutes, I'm going to wrap it up here, let you guys get on with your day. I just can't reiterate enough. In order to be consistent, you have to have a consistent plan. If you've got a plan to trade, it gives you a slight edge on the market. That will play out over time. You're not going to win every trade. You may not win every month, but over time, you'll see positive expectancy as long as your plan has positive expectancy. The BTX method has positive expectancy. So stick with it. Trade consciously, you know, make good decisions, trade safe, don't force trades, don't take too much risk, and everything else works out in the end. All right, so I'm gonna leave it here with you. That's it for me. If you have any questions, you can always email me. I'm around. I do this for you. I do it for me, actually, really, because it keeps me on point and it keeps my head in the game of what I need to be doing here. But, you know, I do it for you guys as well. If you have questions about something,